Hey, this is Justin with DayTradeTheMarkets.com. On November 7th, 2013, we had a pretty nice sell-off in the indexes today, and I wanted to look at the Russell, the Nasdaq, and the emini, and really strip the charts down and just look at them from this perspective of the really strong, what we call relative aggression bars. Just as a background, in our software, we like to look at several pieces of evidence, and I've stripped away all of this. I've taken off the support resistance and the deceleration and the divergence and the filter. And I've just left on these relative aggression bars and high velocity moves. So those are what we call our first building blocks. And just to give a little bit more background about those, these relative aggression bars are showing you in real time the level of buying or selling aggression, or a little bit more than the order flow that's going on in a given time frame. So you could tell when there's some moderate buying or selling aggression. Level 2 is what we call strong, and I've got those on the chart. And what's especially important is what we call level 3, or extreme buying and selling aggression bars. And what we ask ourselves is, when this is typically either a capitulation event or it's the beginning of a nice vertical move. And so when one of these level 3 bars forms, we like to ask ourselves, is there follow through or is there rejection? That's giving us a very good short-term roadmap for the likely short-term direction of the market. And the way you can use that, number one, is you can avoid more often being on the wrong side of the market. Number two, get on the right side of the market more often. And number three, you can use them for trade entry, for holding trades a little bit longer, profitable trades a little bit longer, and so forth. Just want to talk about this today from the perspective of directional bias in the short term, though. So if we look at here's a Russell, and this is a 3-minute chart. This works on any time frame. This 3-minute time frame is just showing the day, and it's giving you a little bit wider view in the day trading realm. But you can see early on we've got some really extreme selling aggression that's coming in. We start to get a little bit of buying that comes in, we get a two-sided market, then we break down lower with some extreme aggression again. It's just showing you clearly, despite the fact that we're in a big-time bull market, bigger picture, this day was very firmly controlled by the sellers. So you can avoid being on the wrong side of the market. You can utilize this to stay on the right side of the market more often. If you're in a trade, you can start to see when it might make sense to get out of a trade, when the other side starts to come in, and so forth. So again, just looking at this first building block of the relative aggression bars and looking at it from that perspective. Here is the Nasdaq, again on a 3-minute, just to keep it the same. Again, you can use this on any time frame, and you can see that early on, right off the bat, we got a little bit of buying that was quickly rejected off of the highs. We got this high velocity move, that's this box. Just another way of looking at some extreme selling coming into the market. Here's level 3 selling. You can again see sellers are very much in control of this market. Again, so you can avoid being on the wrong side of the market, hold winning trades a little bit longer, and so forth. Okay, here's the emini S&P, again on a 3-minute, just to keep it even. I've actually left on our bigger picture levels from the ES as well, looking at this 70-50 as potential resistance, and you can see that's where the selling started to come in with this level 2 bar, high velocity move, and a level 3 bar. Right here between the 53.50 and 61.50 area was what we call a 5-day overlay. It's where the market really consolidated for the past week or so. And you can see the market did bounce off those levels a bit. We started to get a little bit of a two-sided market, but we couldn't take out the high of this level 3 bar. Tested down to the low of this 5-day overlay. Started to get a little bit of buying that came in, but we couldn't get to the other side of it and sold off again. So, same idea here, whether looking at the ES, the Russell. The ES was a little more two-sided than the Russell and the Nasdaq, but just some really nice selling that came in these moves. And here's the Russell again. So, again, that's the utilization of these without looking at even the support resistance and the filter and decelerations and that sort of thing, which just give you additional pieces of evidence to work with in your decision making throughout the day. These level 2 and level 3 bars and high velocity moves really just help you stay on the right side of the market more often than not. Are they foolproof? No, but they're a really nice tool in terms of helping you, again, avoid being on the wrong side of the market more often, stay with winning trades a little bit more often, have more confidence to get in on the right side of the market more often, that sort of thing. So just a way for increasing your edge. Let us know if you have any questions about that. There's other videos on the site. Feel free to leave any comments below, and we'll talk to you soon. Thanks.